I'm Corbett Wall with DVAuction, here with your cattle market summary for the week ending February the 20th. We had feeder and stocker cattle selling firm to $4 higher. The main driver on your feeder weights was we had a lot of big heavy yearlings coming off of wheat pasture down in the southern plains, and the buyers really go after those cattle and competed for them and pushed the prices a little higher, and that kind of swept through the whole country there and pushed the market on the big yearlings even up north. But the main driver was those wheat cattle, those wheat yearlings coming right off of the wheat pasture there. On your calves and stocker cattle, extremely tight supplies was the driver on those and kept those a little bit higher this week. Had real tight receipts this week. Sale barn auction receipts from nationwide were down 32%. Most of that was because of the southeast and that bad icy road conditions that were through there, especially in Kentucky and Tennessee. Southern Missouri, there was a lot of sales that were shut down because of the bad road conditions, and producers just couldn't get the cattle in there even if they wanted to. But in Oklahoma, the biggest three sales there, Woodward, El Reno, and Oklahoma City, their receipts were down 43% from a year ago, and the conditions were not bad in Oklahoma through most of the week there. Started turning bad there late in the week, but down 43%. And those wheat cattle that are coming out of there, they're either selling private treaty or they're still turned out, because it's just not as many as there was. Both Oak City and El Reno were running over 10,000 a year ago this time, and didn't have that big a run this week. But you know, most of the guys that are renting wheat pasture, they can stay out till, you know, the first or second week of March there. So maybe a lot of cattle still out. Maybe they have sold private treaty. Probably still too dry and too short to really have much graze out prospects there though. But the feedlots really push their orders, and they're trying to make break evens on what the futures are saying that fat cattle are going to be when those cattle come out. But they'll push those orders twice a year. Once whenever your green yearlings come off grass there, off summer pastures there, either late in the summer or in the fall, and then again when those green yearlings coming off of wheat pasture. And that's just because those cattle they know are really going to perform. There's a lot of compensatory gain there, and that's that real cheap gain that you get off those cattle that are coming in lightly fleshed or not too fat and empty, or a good weighing condition there. And when those cattle get to where they're going, they really like that feedlot ration. It really tastes good to them. Just like if you or I had been eating salad for 3 or 4 months and somebody lays a perfectly cooked juicy steak in front of us. I mean, you're really going to go to it, and they're going to put on a lot of that cheap gain there real early. But Friday kind of had a bearish cattle on feed report come out. And you know, all three of the factors there were kind of bearish. Not horrible, but the bears are looking for something to sink their teeth into, and wouldn't be surprised if they don't take notice of that next week. But their on-feed totals were a little higher than the same time a year ago at 101%. Placements were small at 89%, but they expected them to be real small. And marketings were only 91%, so kind of a trade-off there with your placements and your marketings through January there. But you know, the industry has kind of been hoping that this late winter and early spring market-ready supplies of fat cattle was going to keep this market up, or maybe even spur it to go back up there kind of in that record range. But we're in that right now. Extremely tight numbers of market-ready fat cattle that are ready to ship right now. But the feedlots are unable to take advantage of it. There's such a small percentage that's available there that's not captivated or already spoken for the next week's kill, that the packers are just able to cut their kill down, slow the chain speeds, as they say, and not have to compete for that little dab, or it's usually always less than 15% of a week's kill that we trade negotiated there. This week through Friday, they only sold about 5% of a week's kill right now, about 26,000 head. They was able to buy them $2 cheaper at $1.60, so we're backing off of that. Maybe this is the last time we see $1.60 again, but we've got really extremely tight supplies coming up, and I would think going into the early part of spring, when they start buying some beef for the grills and doing it out front, that we may be able to get back up in the 160s. But after we get through February, going down the line there on your futures prices are all under $1.50, so we don't have a whole lot to hope for. We're going to lose February here next week, and so the next thing we look to is something in the 140s. So you can kind of bet that it's going to be hard to keep this market up to 160. Dress sales are like 255 to 258 this week. But you know, a lot of people think that maybe we need to just change the way that we negotiate on these fat cattle and tie it closer to the dressed beef sales, to the hog market, and just do a delivery deal in similar to the way the hogs do. And you know, just look, how many independent hog producers do you know? None, usually none. How many did you know 30 years ago? Especially up in the Midwest and Northern Plains, everybody had a few hogs. Everybody fed a few cattle. Well, nobody feeds hogs anymore independently. You know, we've got a lot of big corporate type producers, but you know, unless you're raising a show hog or something, you're not going to see any hogs just out in the country driving up and down the road. So that's probably a pretty good omen that we don't want to do that. But we'll see what happens. But we're just continually evaporating that negotiated trade, and it's just getting down to where it's nothing. But the reason that the big corporates haven't completely taken over cattle production from top to bottom like they have the hog market and the chickens is because you have to have grass. Grass is a very vital cog in that cattle production. And these big outfits can't or haven't yet been able to tie up or contract all the grass in the country. It still belongs to producers. It still belongs to farmers and ranchers and people like that. You've got to have grass, not only for your cows, but also to grow your background in cattle up. And I'm including wheat into that too. But you know, we've seen a lot of rebuilding, and we've already seen hard data that we're starting to rebuild the herds. There's been a lot of heifer retention. We're starting to see those numbers come back, and they'll progressively get higher here. But we're our own worst enemy. Here in the last few weeks, we've just seen a rapid increase of replacement heifer buying. And this week was probably the worst we've seen, or the worst. I see the highest replacement heifers we've seen in quite a while. And especially up in South Dakota and Nebraska and places like that. In Hub City and Aberdeen, South Dakota, you know, the bulk of your top quality heifers outsold the steers, and some of them by a long ways. And a lot of those heifers, open heifers up there weighing 700 to 800 pounds, are bringing $1,850 to $1,950 per head, which is kind of hard to figure. We're about done with those big bred heifer sales now because most of them are starting to calve. But you could have bought just ringful after ringful of guaranteed bred heifers weighing 1,000 to 11, maybe 1,150 pounds in their third stage. You knew they were bred. A lot of them were AI'd to high-powered bulls, and they were only costing about $500 more. So, you know, it makes you wonder why everybody's just delving into these replacement heifers, because you know, even the guys that thought ahead and had those heifers ready for when they needed to come are not getting paid for them like they should. But that pretty much wraps up your cattle market summary for this week. For this report and more information, check out our website at DVAuction.com and the StockExchangeNews.com. And from my DVAuction home office here in Maysville, Missouri, we'll talk to you next week.